Let's focus on the auto sector right now and the potential damage from tariffs. Our guest is Chris Murray, Managing Director of Institutional Research at ATB Capital Markets. Thanks very much for joining us.
Hey, good morning.
So we know that it's big, the auto sector, although I was surprised. You reckon that sales of just under 95 billion or about 11% of manufacturing revenue. So sure. I would have guessed that it was more.
Yeah, I think the thing to think about, too, is, of course, if you're on Ontario, it's a much larger proportion of what we do. But if you look across Canada, it's still a sizable number.
Yes, and they're high-paid jobs, they're high-value-added jobs.
Exactly.
Sorry, Chris, I was going to say, I mean, it's unknowable, really, what the long-term effect of these tariffs will be, how long they'll be in place, for example.
Sure. And some of the stuff that we're looking at right now is, how is this going to impact not only the primary manufacturing, but also the supply chain and the parts? Because one of the things that's a little bit unknown is still how you take parts from around the globe. And even if you've got a final assembly of a vehicle in the U.S., there's going to be a lot of foreign content that comes into that. Mm-hmm. And in a number of cases, you'll see parts go back and forth across the border several times. So does the tariff happen on the first time, the second time, every time, or is it only on the final assembly? So there's a lot of unknowns. You're right.
Are we likely to see a doomsday scenario with actual plants closing in Canada?
I think it's way too early to start thinking about that. There's a couple things to think about. Any shift in the supply chain usually is going to take years, if not decades, to happen. Part of the uncertainty around tariffs is it's very hard to plan where you're going to spend $1 billion for a new assembly plant and how would you replace that overnight. So it might be, the logical play may be just accept the tariffs and see how the market reacts. There are signs, though, that there could be some sort of relief in the auto sector. But again, we're still going to see how that might play out.
Because he has proclaimed a 25% tariff on imports of autos and automobile parts.
Yeah, but then there was also a discussion that he had with Premier Ford where he talked about there's the potential, perhaps, if the manufactured vehicles in Canada have 50% U.S. content, that maybe they'd be exempt from the tariffs. Again, the devil's going to be in the details.
Right, and of course, it's the dilemma for auto executives is Trump, in theory, will be around for just 4 years. But do we make decisions lasting decades?
Right. And even then, there may be some political implications in the U.S. on whether or not the tariffs last for even that long.
Right, if there is enough disruption. Maybe you can just put up a 5-year chart for Ford or for GM. The GM, I think, is seen as particularly vulnerable here. I'm not 100% sure why.
Yeah, well, because I think the number, if you look at U.S. sales, only about 57% of GM cars are actually made in the U.S. that are sold in the U.S. And so if you look at where they bring cars from, predominantly from Canada and Mexico, they probably have a lower proportion of vehicles that are actually made in the U.S.
That's interesting. Years ago, didn't somebody say what's good for General Motors is good for America?
Right, and generally, I think you'd have to leave it as tariffs are not going to be good for the automotive industry in general, but it's going to be bad across the board.
I mean, we have pretty significant presence of Toyota and Honda in Ontario, and they make cars for our domestic market. But I guess the risk would be cars they ship south will be hurt here.
Potentially, that's very much the case. And again, this will go back to how the rules are organized around domestic content versus international content. And as well, we've made the point a couple times that perhaps there's an opportunity. Again, you think about other trade agreements, Canada, the EU, for instance, that's still, it's been ratified to the first step, but there's other opportunities. Maybe that brings about some change and makes European cars more attractive. Again, one of the things that...
in our market?
In the Canadian market.
Right, but do we have any prospect of selling cars to the Europeans?
Again, the issue there, or the question would be, is could you, over time, change those flows where, particularly, back to your point about some of the Japanese manufactured vehicles, would it make sense to reallocate some of that supply into Europe?
Yeah, I mean, you could see RAV4s are made here, Civics are made here.
Smaller vehicles that might be more attractive to the European market.
Yeah. I am a devotee of European crime shows. And it appears that European gangsters like to go around in Ford F-150s and American light trucks, Silverados.
Exactly. So
I don't know if that's very, I don't think that's very representative. Yeah.
Sure, exactly. But again, we'll see it. We'll have to see. And to your point, like there's going to be a lot of uncertainty around how this could play. I mean, one of the estimates that we have is that should tariffs come in fully, and there's a countervailing duty, and again, the reaction of whatever the Canadian government might come up with post the election. We could see something in the order of $3,000 to $5,000 added to the price of a vehicle
in America,
in
or?
Canada.
Oh.
And some of the estimates we've seen from others, the price of vehicles in the U.S. could move $3,000 to $6,000 a unit. But there's also a risk that they could see dramatically reduced supply. One study we saw said that they could reduce production about 20,000 units a day. So, that would be pretty sizable in the grand scheme of things.
Well, the dealers might be tempted to add their own, their little local delivery markups. Yeah,
exactly.
Yeah, like we saw during COVID.
Exactly.
Thanks very much, Chris.
No problem. Thank you.
Chris Murray joined us.